When both US cash and futures barely move after 3 days of exhaustion signals. Is this capitalization or institutional repositioning? When semiconductors bounce 97 base points after collapsing but financials finally break, is this bounce tactical or contagion spreading? When all Asia futures implied bounce simultaneously on momentum exhaustion, is this institutional buying dips or coordinated relief? When volatility finally normalizes but yields keep rising and crude sells hard, is growth bottoming or rolling over further? When developed Asia bounces hard but Australia diverges negative, is this commodity specific weakness or regional demand concern? Asia is minutes away, 5 signals, everything you need before the first bell. This is the Asia first look. Let's get into it. S&P 500 closed up 26 base points. Nasdaq Composite closed up 36 base points. Dow Jones closed up 24 base points. That's the fourth consecutive day of positive closes, but with magnitude collapsing. Day 1 was 198 base points, day 2 was 80 base points, day 3 was negative Dow, day 4 is 26 base points. Momentum has completely exhausted. Cash closed with conviction gone. Here is what happened after the bell. Nasdaq futures repriced to minus 3 base points. S&P 500 futures to plus 7 base points. Dow Jones futures to plus 16 base points. Futures are flat to slightly down despite positive cash. That's the first signal cash can't drive futures anymore. Then Asia saw exhaustion and bounced. Nikkei futures implied up 238 base points. Korean futures implied up 221 base points. Shanghai Composite futures implied up 70 base points. Hang Seng futures implied up 172 base points. Australian futures implied up down 26 base points. Asia bounced hard under execution bottom. That's institutional relief buying after 3 days of selling pressure. Crude oil selling 161 base points overnight is a confirmation signal. That energy collapse tells you commodity markets are see growth caution persisting despite Asia's bounce. Asia bounces but crude break keeps breaking. Which sector will Asia actually buy? That's what sector leads confirms. Technology ETF up 114 base points. Semiconductor index up 97 base points. That tells you semis are bouncing hard but tech bouncing harder. Semiconductor bounced from the exhaustion low, but semiconductors still underperform broad tech. That tells you semiconductor demand conviction is still cushioned even on the bounce. Institutional capital is rotating back into tech but selectively. Semiconductors are bouncing but not leading. Financial ETF down 27 base points. That's the first break. Yesterday, financials up 75 base points. Today, down 27 base points. Financials broke hard on day 4. That tells you the financial sector bottom was exhaustion relief trade, not structural support. As Asia bounces, financials are rolling over. That's contagion risk. If financials break, financial stocks everywhere break. Healthcare ETF down 79 base points. Material ETF up 72 base points. Industrial select down 49 base points. Energy ETF up 147 base points. But crude oil selling 161 base points hard. Copper down 51 base points. Gold up 16 base points. Commodities fragmenting badly. Energy equities bouncing while crude breaks. And copper sells. tells you commodity rotation is not structural. Asia bounces, but commodity support is falling. Asia's regional picture shows all developed markets bouncing hard under execution bottom. Nikkei futures implied up 238 base points. Japan is bouncing the hardest. Tokyo lost 199 base points from day 1 to day 2. Today, Tokyo bounces back 238 base points. Thus, institutional buying the dip after 3 days execution. Korean futures implied up 221 base points. Korea maintains conviction and bounces with Japan. Both developed Asia leaders bouncing signals relief buying is real. Hang Seng futures implied up 172 base points. Hong Kong bouncing hard. Hang Seng Tech futures implied up 367 base points. Tech positioning bouncing into the dip. Taiwan futures implied up 112 base points. Semiconductor recovery bounces confirmed. Hang Seng Financials futures implied up 41 base points. Hong Kong's financial sector bouncing but light. Shanghai Composite futures implied up 70 base points. China bounced from flat. Shanghai's bounce is less than developed Asia but still meaningful. Chinese institutions are buying the execution bottom too. Australian futures implied down 26 base points. Australia diverged negative. That's the execution risk. Australian dollar down 8 base points. Chinese currency up 7 base points. Yuan weakening tells you Australia's weakness is a real, not tactical. Volatility index down 127 base points to 17.94. Fear is completely normalized now. 2 weeks ago, volatility index was 25. Today, volatility index is 17.94. Fear is evaporated completely. 10-year treasury yield up 44 base points to 4.30. 5-year treasury yield up 44 base points to 3.91. 30-year treasury yield up 78 base points to 4.9. 13-week treasury down 6 base points to 3.61. The long end yield curve continues rising. That's not growth recovery, that's a growth caution. Institutions are selling bonds. Fear is gone, but growth expectations are still rolling over. US dollar index up 13 base points. Yen up 10 base points. Japanese currency up 10 basis points. Safe haven currencies holding tells you institutions are still uncertain about growth, not panic, not confidence, measure uncertainty. Crude oil selling 161 base points. Hard is the confirmation. Gold up 16 base points, barely holds. Copper down 51 base points. Commodities fragmenting tells you commodity market don't believe in Asia's execution bounce. Crude's hard breakdown while Asia bounces signals him crude is the pricing further growth weakness ahead. Asia bounces today, crude is pricing pain tomorrow. Nikkei futures implied up 238 base points. Is Japanese execution bounce? Tokyo bounced hard from the collapse. If Tokyo opens and extends this bounce, institutions are genuinely buying dips into growth execution. If Tokyo opens and bid evaporates, the bounce was just overnight algorithmic relief. Japan is the pivot for developed Asia. Watch Tokyo's opening volume. If heavy, institutions are committing. If light, overnight bounce was just technical. Korean futures implied up 221 base points. Is Korea's bounce persistent? Korea bounced with Japan. Seoul maintains conviction through the execution low. If Seoul opens and holds Tokyo's bounce, both developed market commit. If Seoul rolls, Korea's conviction finally broke at execution low. Korea's execution risk is high. Shanghai Composite futures implied up 70 base points. China bounced from flat but smaller than developed Asia. If Shanghai opens and extends, China's strategic buy signals relief. If Shanghai rolls back, China's caution persists. Australian futures implied down 26 base points. Australia diverged negative on the execution bounce. That's a breakdown signal. Crude oil selling 161 base points. Hard. Must stabilize for Australia to hold. Watch crude momentum. If crude extends lower, Australian weakness becomes contagion that spreads. That's watch signals pivot point. The signals are set. Asia has not opened yet. The first move always tells you more than everything you just heard. Japan opens first, that's your signal. Shanghai's first minutes, that's your confirmation. Watch which one the markets humbles from your own view. Watch the Japan, then come back and drop it in the comments. Did it deliver or did it surprise you? Join the community where market minds speak. I am Jay. See you in market.